Welcome to Module C, where we officially begin our journey into technical analysis. Before we dive into the complex charts, I highly recommend you grab a pen and a notebook. Taking detailed notes on each important topic will be absolutely crucial for your long-term success in this course. First, let's set some realistic expectations for your journey. You must understand that technical analysis cannot be mastered all at once. If you think you can learn this entire discipline overnight and become instantly profitable, I have to tell you that it is simply not possible in the real world. No matter how much technical or fundamental analysis theory you study, real success requires raw experience. That experience only comes by giving the market time. While long-term investment might require less daily monitoring, active trading demands a significant and proper investment of your time and continuous daily focus. To ensure there is absolutely no confusion as we progress, let's outline our complete technical analysis roadmap. We will be covering a comprehensive curriculum structured from Module C.1 all the way through Module C.6, breaking down complex market concepts into highly digestible step-by-step lessons. Starting with Module C.1 Part 1, we will focus heavily on candlesticks and their specific patterns. You will learn how to accurately read the story behind single candlestick patterns, double candlestick patterns, and the more complex triple candlestick patterns to truly understand underlying market psychology. After mastering those formations, we will move on to broader chart patterns. Then, in Part 2 of this module, we will shift our focus to price and volume. We will thoroughly examine the price-volume relationship, which is a critical concept for confirming the true strength of any market move. Moving right along to Module C.2, Part 1 introduces the core principles of trend analysis. The trend is your friend, and you will learn exactly how to identify and safely trade within clear uptrends, downtrends, and sideways or ranging markets effectively, ensuring you are always on the right side of market momentum. In Part 2 of the second module, we will introduce the essential concepts of support and resistance. These are the invisible floors and ceilings of the market. Understanding where price is historically likely to bounce or break is fundamental to timing your precise entries and exits correctly. Module C3 is where we bring in the mathematical tools. In Part 1, we will cover the most reliable technical indicators. We will do deep dives into moving averages, the Relative Strength Index or RSI, MACD, and Bollinger Bands to help you objectively read market momentum. Then, in Part 2 of Module C.3, we will explore the fascinating world of Fibonacci. You will learn how to draw and interpret both Fibonacci retracements and Fibonacci extensions, which act as predictive mathematical tools for finding hidden areas of support and resistance in the future. Next up is Module C.4, which is incredibly actionable. Part 1 focuses entirely on breakout concepts and related trading strategies. We will cover the simple yet powerful mechanics of what exactly happens when a price violently breaks out of a well-established trading range. Part 2 of this module covers the absolute most important aspect of trading survival, risk management. We will discuss specific buying strategies, how to strictly set your stop loss to protect your trading capital, and how to define realistic target settings for your winning trades. Finally, we arrive at Module C.5, which is a highly important practical application phase. Here, we will cover the exact criteria for stock selection, clearly distinguishing between stocks chosen for short-term trading versus long-term investment. Let's look at the foundational elements we need to start this analytical process. Moving right into Module 5, we tackle the critical component of risk management. This section is designed to establish strict buying strategies, precise stop-loss parameters, and realistic target settings. Without a solid risk management framework, even the best technical analysis can lead to significant portfolio drawdowns. Within the same module, we also differentiate between stock selection for short-term trading versus long-term investment. The criteria for choosing an asset vary wildly depending on your time horizon, so we will break down the specific metrics and setups required for both distinct approaches. Following risk management, Module 6 addresses trading psychology and common behavioral mistakes. Many traders fail not because of poor strategy, but due to emotional indiscipline. We will analyze how fear and greed drive market cycles and how to maintain a neutral mindset during volatile price action. To solidify everything learned from Module 1 through 6, this final section includes comprehensive case studies. We will walk through 1 or 2 live trade demonstrations, applying our complete technical analysis roadmap to real market conditions, bridging the gap between theoretical knowledge and practical execution. Now that we understand the roadmap, let us look at the actual tools required for technical analysis. We primarily use a platform called Nepse Alpha. By opening your Chrome browser and searching for Nepse Alpha chart, you can access a highly functional interface tailored for regional market data. Once you are on the home page, look for the option that says Free Login for Live Chart. Creating an account and logging in with your credentials is a crucial step, as it unlocks features that are otherwise restricted for guest users, setting up your primary workspace. After logging in, you gain immediate access to live market data. This means you can observe real-time price fluctuations, tracking every upward and downward movement while the market is open. This live feed is essential for timing your entries and exits accurately during active trading hours. Navigating between different assets is straightforward. If you want to analyze a specific company, simply use the search function. For instance, typing NTC will instantly pull up the price chart for that specific stock. You can seamlessly switch back to the main index or any other ticker. Next, we must understand chart timeframes, which are controlled by the timing menu at the top of the interface. If you see a D, it means you are viewing a daily chart. In this view, each individual candlestick represents the entire price movement that occurred over a single trading day. You can adjust this time frame to suit your trading style. If you switch to a 1-hour view, each candle represents 60 minutes of action. The platform offers micro time frames like 1 minute for scalping, all the way up to weekly and monthly candles for macro-level investment analysis. The platform also lets you change the visual representation of price. While you can view data as a bar chart or a line chart, which only plots the closing prices and reduces market noise, we highly recommend sticking strictly to candlestick charts, as they provide the most comprehensive price data. At the top of your screen, you will notice an FX icon. This is your gateway to technical indicators. Clicking this allows you to overlay tools like the MACD or the Relative Strength Index, RSI, directly onto your chart. We will explore these specific indicators deeply in upcoming sessions. Customizing your workspace improves focus and reduces eye strain. By clicking the moon icon, you can toggle the interface into dark mode, or switch back to light mode if you prefer. Additionally, if you find the background grid lines distracting, you can remove them entirely through the settings menu. To ensure you always know which asset you are analyzing, especially when switching rapidly between tabs, you can enable a background watermark. By navigating to Settings and checking the watermark option, the ticker symbol, like KDL or NEPSE, will be displayed faintly behind your price data. Finally, we utilize the drawing toolbar located on the side. This includes basic utilities like cursors and erasers, but more importantly, it houses your trendline tool. By connecting 2 or more structural points on the chart, you can project trend lines to anticipate future price reactions, leading us into our next analytical phase. Moving right along, let us look at trend lines. A trend line is drawn by connecting 2 or more points on a chart, typically swing lows in an uptrend. By establishing these first 2 points, traders project the line forward to anticipate a potential third support level where the price might bounce. However, the market does not always follow our expectations. Sometimes the price fails to react at this projected third point and breaks through, which is known as a trend line failure. Understanding this helps traders manage their expectations and avoid relying solely on a single line. Beyond diagonal trend lines, horizontal lines are incredibly useful. A standard horizontal line marks a specific price level across the entire history of the chart. But if a trader only wants to track a level from a certain point forward, they will use a horizontal ray, which starts at a specific price and extends infinitely to the right. Next, we have parallel channels. This tool takes the concept of a trend line a step further. A trader draws a primary trend line connecting 2 or more lows, and then creates a parallel line that connects 1 or 2 of the corresponding highs. This creates a channel that contains the price action. Within this parallel channel, the dynamics are quite straightforward. The bottom line acts as a dynamic support level, where buyers typically step in, while the top line serves as dynamic resistance, where sellers often push the price back down. Another essential tool is the Fibonacci retracement. While we will dive deeper into this in future sessions, the basic application involves drawing the tool from a significant low point to a recent high point during an uptrend. This plots horizontal lines that indicate potential pullback levels. The most critical levels to watch here are the 0.5 and the 0.618. Very often, these specific ratios act as strong support zones. As seen on many charts, the price will retrace to these levels and then reverse, continuing its original upward trajectory. When it comes to actually planning a trade, the long position tool is invaluable. Let us say a trader is eyeing a setup. They can place this tool on the chart to visually map out their entry point near a known support level, ensuring they have a clear plan before committing any capital. The tool automatically calculates the risk-to-reward ratio. It visually defines the stop loss, usually placed just below the previous support, and the target profit area. This instantly shows exactly what percentage of the account is at risk compared to the potential reward, keeping risk management strictly in check. To measure market movements accurately, traders use the price range tool. By dragging this tool from a specific low point to a high point, it instantly calculates the exact percentage change and point difference between those two areas. It is a quick way to gauge volatility and historical movement size. Alongside these measurement tools, simple arrow marks are frequently used to highlight specific candlesticks, breakouts, or areas of interest on the chart. While optional, they're great for keeping visual notes or pointing out precise moments where the price action shifted. Finally, for this segment, let us look at the rectangle tool, particularly on higher timeframes like the weekly chart. Instead of relying on a single, thin, horizontal line, traders use the rectangle tool to identify broader support or resistance zones. By connecting the lowest points and encompassing the surrounding price action, the rectangle creates a thick band of support. This is highly effective because market reversals rarely happen at an exact penny. They happen within these general zones of buying interest, which we will continue to explore as we move forward. Shifting our focus to the weekly time frame, let us examine how to identify critical support levels. The rectangle tool is incredibly effective for this. By selecting the tool and dragging it across the chart to connect the lowest price points, you establish a solid support zone rather than just a single fragile line. Similarly, we can map out resistance areas. You simply take the same rectangle tool and apply it to the upper bounds of the price action. Drawing this resistance zone across the highest peaks helps visualize where the asset historically struggles to break through, forming a complete channel alongside your support. Once your primary zones are set, you might want to track specific price movements. The Path tool allows you to draw continuous, connected lines across the chart to trace complex trajectories. While it is certainly available in your toolkit, many traders find they do not use it quite as frequently as the basic support and resistance shapes. Beyond structural lines, you will often need to annotate your charts for clarity. If you need to highlight a specific breakout or an unusual candlestick, the circle tool is perfect for drawing immediate attention to that area. Additionally, the text tool allows you to type out custom notes directly onto the canvas. For precise numerical tracking, the price note tool is indispensable. Instead of guessing where a key level sits, this tool lets you pin an exact price tag to any specific point on the chart. It is highly useful for marking precise entry targets, stop losses, or historical highs without cluttering your view. Moving on to navigation, the primary function you will rely on is the company price chart search. When you need to analyze a specific asset, you simply use the search bar. For instance, typing in a specific institution, like NIC Asia Bank, will instantly pull up its dedicated historical price chart for your review. Once the specific chart loads, adjusting your time frame is the next crucial step. Here, we are looking at a one-day price chart. Selecting the appropriate time frame, whether daily, weekly, or intraday, dictates the entire perspective of your analysis. It is one of the most important settings you will interact with on the platform. As you spend more time on the platform, these basic tools will become second nature. Looking ahead to future sessions, we will dive into more advanced technical instruments. We will explore the intricacies of Fibonacci retracements and trend lines, which are far more critical than simply marking long positions. That wraps up the core concepts for this introductory module. To summarize, mastering your charting software begins with the basics, utilizing rectangles for robust support and resistance zones, effectively applying annotation tools like price notes, and efficiently navigating company searches and timeframes. These foundational skills are essential before moving on to complex technical analysis. Keep practicing these core mechanics.